big bad
Hey y'all,
guy.
happy Sunday. So today we're going to discuss how much dividend income my $40,000 portfolio made for the month of May. If you haven't already, go ahead and like this video and subscribe for future content, as it really helps me know what y'all like to see and want to see in the future. Here we go. All right, y'all. So May wasn't too bad of a month. It wasn't by any means great, but we took one step in the right direction of moving closer to our goal, which is to be able to retire from my regular job and just live off the dividends I make from these stocks and whatever stocks I buy in the future. So to kind of reorient you to our sheet here, we have my taxable brokerage or my bridge account on the top. And then on the bottom, we have my Roth IRA. So a couple changes to our sheet. It looks a little different compared to last time. If we start over with column I and column J, you can see that I have two yield accounts. And you're probably wondering why. Well, after rewatching my video a bunch of times and thinking about accurately presenting my portfolio to you, I realized, I'm basing, or the yield I had last time, which is actually this yield SP and J. These are pretty much the yields I had last time. They're based off the current share price, not my cost basis. So I base column I now off my cost basis, so I can get a more accurate representation of my actual portfolio yield, not what the stocks could be yielding at the time of filming this video. So to kind of break that down real quickly, let's look at CM, for example. Highlight. There we go. Okay, so today's price is $68.83. That's as of this past Friday. My cost basis, my average cost basis is this cell here. That's $42.79. The dividends per share, there you go, is 97 cents per share. So what that does is you multiply this number by 4 to get your annual yield and divide that by your average cost basis to get your actual yield. If I was to get this yield here, I'd take the 97 cents multiplied by 4 and divide by today's price to get the current yield of the company. So that's how I got that. And if we look down at the bottom here, we can see that the yield for my bridge account or taxable brokerage is slightly higher than the anticipated possibility, which is cool. Again, you can see I've got some winners and some losers, but we'll improve those in the future by buying low as much as we can, or dollar cost averaging also. In my Roth IRA, you can see the same. It's pretty much the same. It's a little better, but close. If we go down to our portfolio yield compared to the estimated yield, we're about 0.1% higher, which I promise you isn't sexy now, but it'll be amazing in the future. If we look at the income, or my estimated income, so for Fidelity, it'll estimate the amount of income you make a year from the day in which you're looking at your sheets. So for the month of April, they estimated in a year I'd be making $854. That's if I withdrew my dividends, but I'm reinvesting my dividends, which you should do. And now, a year from now, they expect I'll make $867. Again, we should see this number increase every single month unless something crazy happens to the portfolio. But that's why we check every month and every week, if that. Our income year to date is $221.63 for the bridge account. Dropping down to the Roth IRA, our estimated income was $501, is now $505. Our actual income was $158.56. And then jumping down to the bottom, our portfolio total, our current yield based off all our stocks is 3.95%, which is pretty good. Our target goal is 4%. Do I have the book up here? I do. It's based off of the book Get Rich with Dividends by Mark Lichtenfeld. Again, this is the guidebook I'm using for this account. Put it off to the side. Our estimated income is $13.55. That was for last month. This month, a year from this month, it's expected to be $13.72 in a year from now of income. Again, we're seeing that general increase in the positive direction, which is what we want to see. Our actual income, which again we'll break down next, but from January through the month of May, was $380.19. I almost forgot my last portfolio update for this month was that I sold my Nvidia stock. I'm going to detail that all in one video, kind of tying in the craziness from the tariffs and then why I sold it. So be on the lookout for that in the future. All right, so moving on to my income sheet for the month of May. Highlight. There we go. Okay, for the month of May, we got Paychecks from O, of course, because they're the monthly REIT dividend producer. So we got $7.76. As you can see, we are on the upward trend for O, which is pretty cool. Our next paycheck was MPLX, which is a MLP, which is Master Limited Partnership. It's a specialty kind of company like an REIT. MLPs are typically for energy and like oil and drilling and stuff like that. What's special about them, again, take it with a grain of salt. Please consult a professional before you invest in an MLP. Your broker will probably scare you about it too. But for an MLP, based on my understanding, is that when you buy the stock, you receive the dividends. The dividends are tax-free, but it reduces the cost basis from which you bought the stock. And so if I bought the stock, for example, for $20 today and I sold it for $40 later, I would, of course, pay capital gains on that $20 gain. But let's say I get $1 a year for the next 20 years. That'll reduce my cost basis from $20 from which I originally bought the share all the way down to $0. So I'm actually paying capital gains on all 40. If I have that wrong, someone please correct me down below in the comments. Moving on, the treasury account, the standard account that I hold my cash at Fidelity, which is this FCFXX. It's a treasury account. I got $3 from that. Moved down to the Roth IRA. FBiz gave us $8.42. Lowe's paid us $70.79. And then the same thing, treasury account, but just in the Roth, paid us $2.38 for a combined monthly income of $59.10. Moving on to our data. So I've updated this so I don't look as silly anymore. I felt pretty stupid last month when our yield here looked to be, it was like 2.5 or if that, 2.4% or something like that. And I thought, no, I didn't do this math right. It turns out I was kind of right. So again, this 3.95 is based off of the yields off of our cost basis, which I showed you on the first sheet of this Excel booklet. And again, I updated the value to be there accordingly. The biggest thing to highlight, and again, I'll show you in the chart because it looks, or the chart because it looks prettier. But to highlight, in 20 years, 20 years from today, we'll be making approximately $5,346, which is under what my monthly income is. If we go 21 years, that'll be $7,300, which is still under my monthly income. But if we jump to 22 years from today, we'll be making just above what I currently make. I don't know off the top of my head. I'll have to go check. But $10,162 is slightly above what I currently make today. And that's, kind of what we're shooting for. That's $121,000 in dividends a year in 22 years. I'm 27 today. That would put me at 49. So I don't know. You tell me. 49 years old, making $10,000 a month just in dividends, and that's not including anything else I'm doing. Sounds like a pretty good plan to me. Now, closing this out, looking at our journey to retirement on dividends, it's just a bar chart. It just looks sexy. Again, that's just small potatoes there. We're looking at that 22-year or 21-year mark, which I told you earlier. It's amazing. Just in 30 years, if I don't touch the dividends, this is our monthly dividend could be over $300,000 a month every month. I mean, again, it's exponential. It's amazing how much this stuff can grow if you just don't touch it. And that's the beauty of it. This portfolio is me not adding any extra income except reinvested dividends. So it's not me taking extra money from my paycheck and putting it in. This is just reinvesting the dividends over the next 20, 30, 40 years. And it's amazing to see the potential of what this portfolio could grow into. I hope you all enjoyed my video today. I hope I could, probably convey the power of just growing a dividend portfolio. Again, this isn't even maximizing capital gains. So you saw on that data sheet my portfolio value. That could be so much more if I was just investing for capital gains. But like I told you, my goal is dividends because I want to be able to bring in income, whether I'm at NTC or if JRTC in the future, I don't know, deployed overseas or something like that. Whatever your lifestyle is, if you're military or if you're going away working a lot, the power that dividends have just by reinvesting them, they can grow your portfolio for you. I'm not saying it's a set and forget kind of thing. It's something you definitely need to keep up with. But, it's your money working for you, and that's the goal at the end of the day, creating that passive income that builds your income for you so that you can live the life you want to live. If you're looking for a financial coach to help you plan your financial future, my Calendly is linked in the description below and also in the comments. Other than that, I love each and every one of you, and I'll see y'all in the next video.